Hello, everyone, and welcome to Zonda's second quarter housing outlook. Today's focus is on Florida. I'm Allie Wolf, the chief economist for Zonda, and I am so pleased to be joined today by my dear friend, Kristine Smale, Zonda's senior vice president of advisory and Southeast and Florida expert. Before we begin, please note that we will be recording today's event, and the recording will be emailed to you within the next 24 hours. Further, feel free to submit questions as we go. Time permitting, we'll take some live today. As mentioned, we are Zonda. Zonda is a housing data and consultancy firm. We track the entire building lifecycle from raw land all the way up until the closing out of new home communities. Our proprietary data is focused on the new home market and can be found in our Enterprise platform. Enterprise is the most complete data solution for home builders, where you can filter and sort land, lot, sales, and pricing data in thousands of different ways. We also offer market snapshots for the top 65 metro areas across the country with market health indicators, Zonda's new home pending sales index, valuation patterns, and more. If you're curious about a specific market, feel free to go to zondaHome.com/market-snapshot for a complimentary report. Kristine and I are part of Zonda's advisory team, led by Tim Sullivan. Our advisory team does custom market studies across the country, including lot and product segmentation and built-to-rent research. We not only do custom work on the built-to-rent market, but we are launching a new research report focused on the space in July. Scan the QR code that you see on the screen here to learn more about the subscription and pre-sale pricing offers. Beyond our data and advisory services, we have a growing list of upcoming events where you can meet our team in person across the country. Most notably, we will be in Seattle next week for our Seattle Dealmakers event. Our beloved Builder 100 starts at the beginning of May, and the Pacific Coast Builders Conference, or PCBC, starts at the end of May. Zonda is teaming up with PCBC, and you can use the promo code ZONDA when registering to receive complimentary exhibit pass or $150 off a max pass registration. For today's agenda, I will spend about 15 minutes going through high-level indicators and stats on the state of the housing market before I pass things off to Kristine to discuss more local housing trends in Florida. So where I want to start, because we have such a short time together today, I'm going to not talk about what we're seeing in the labor market or with inflation. We won't cover the collapse of SVB. Really, none of that, more than just acknowledging that before we saw the collapse of SVB, we were in an environment where mortgage rates were going back up towards 7% and likely would have gone over 7% given the still strong economic data. What we saw in real time from our Zonda database was that consumers were pulling back as interest rates went back up towards 7%. But because of some of the new heightened economic concerns, we have investors now that are putting more of their money towards the 10-year Treasury. That's pushing yields down. That's pushing mortgage rates down. So instead of talking about rates in the low sevens, where we are today is talking about headline rates in the low sixes. So we can say good news, affordability challenges aren't as bad as they were. You can see that on the chart. We had our run up. We've seen this roll over. But we also acknowledge that there's been an 82% change in the median monthly payment across the US going back to 2019. The affordability ratio for the new home market used to be 50% in 2019. That meant 50% of households could afford the median price new home. Where we are today, it's just under 30%. And what's happening is consumers have responded in the way that we would imagine. If you look at total existing home sales, we're down about 23% compared to last year. Zonda's measure of new home sales down about 18%. But also notice the month-over-month uptick from both of these data sets. Existing home sales up almost 15% month over month. New home sales up 2% following a 14% increase the month prior. If you look at new home sales and backdate it, where this puts us is roughly in line with where we were in 2019. As most of you know, we like 2019. We think this is a good year for comparison, a good, healthy market. Put a different way, as you look at the slide, yes, there has been a response to stretched affordability, but the spring selling season is starting off a lot stronger than originally expected. We see that in terms of total national sales. We also like to look at the average sales rate. Most of you know the average sales rate is if builders have homes to sell, how well are they selling per month, per community? This is sales adjusted for supply. We have different years of comparison here just to give us the sense what happened in 2017, what happened in 2019, 2021, and current. What you're seeing across the board is most markets are off from the recent high of 2021, and that's exactly what you would imagine to happen when we talk about this change in overall affordability. But most markets are in line with or above 2019, per what we just talked about. Again, if you look specifically at the markets in Florida, what you can see is that trend, exactly, down from the height of the market, but still posting pretty strong results. If you've seen us present or read any of our articles recently, we've outlined why we think there has been this outperformance. Part of it is seasonality. Part of it is acceptance. People just coming to terms with 3% interest rates are a thing of the past. Part of it is pent-up demand. People coming back to the market after leaving at the end of last year. Part of it, not shown here, is builders gaining overall market share. And part of it has to do with discounts. Now, what I want to talk about is where the market was and how builders responded at the end of last year and how that's evolving to start this year. So if you think back to third and fourth quarter, market had slowed even in the strongest markets across the country. It was down from where it came from. Builders worked to find the market through using some kind of incentives and or price cuts. See where that threshold is for consumers. What we know is 62% of builders were willing and able to buy down the rate to the mid 4s to low 5s. In Florida, that was 80% of builders that were willing and able to offer rates in the high 4s. When you look at pricing, we know that pricing in a lot of areas is still up year over year, some markets down year over year, but most part up. But then you have to look at the change of price from peak. We know 51% of builders have lowered prices between 5 and 20% from overall peak levels. In Florida, that's 60% of builders who've lowered prices from 5 to 15. So not as high, not going up to that 20%, but you're still seeing that some of that increase in activity in Florida has been supported by some price changes and some incentives. Why we think this is important is we knew, for one, people were pulling back from the market because affordability got too stretched. But we know, for two, there was just this confidence factor. From our consumer research, the number one reason renters were renting is because they were waiting for prices to drop. And as builders worked to find the market last year, all of a sudden, people waiting for a deal, people waiting to feel a little bit better of the market, started to see that there were opportunities available. And that's where the discussion becomes even more interesting, because we know what has happened to pricing, but we also know that the pricing of homes remains dynamic. End of last year, we got to a point where we had 50-50, 50% of builders lowering prices, 50% of builders holding prices flat. Today, only 8% of builders lowering prices, 59% holding prices flat, and 33% actually raising prices. Now, as we look at this, it feels a little bit counterintuitive and kind of working against what we know our policymakers are trying to do. They're trying to slow inflation. They're trying to slow home price growth. One of the ways that they can do that is raising short-term interest rates, and housing is one of the most interest rate sensitive industries. So to see prices going back up is kind of moving in the wrong direction of trying to bring the market back down. But I think context is important here. Last January, we had 90% of builders that were raising prices. Now, if you look at the national numbers and then layer in Florida, what we know is 44% of builders reported that their overall pricing was up, 56% flat. So notice that we don't have builders, at least that are reporting to us, that they were lowering prices in Florida as of March. A big question is, well, why are we seeing that prices are going back up? Well, part of it, think back to the last slide saying, oh, builders have found the market. Well, how do you find the market? How do you know exactly what the right level is? That's difficult to know. It's an art. It's not a science. And so we have countless builders that lowered prices, saw so much demand return that they actually are raising prices again to try to temper that back. Part of that is also supply and demand. Now, in Kristine's section, she's going to show you a lot of stats on the supply environment. Where I want to focus on is looking at demand. Think about the environment that we came from. We had, during the height of the pandemic, basically every kind of a buyer group that could want to buy a home actually out looking for a home. Ran across so many different categories. What we've seen now is there's still a lot of groups that are active, but the overall buyer pool has come down. But think about, in general, that a lot of buyers and a lot of demand is not that cost conscious. They don't care as much about rising interest rates. They don't care as much about rising home prices. This includes higher income individuals, luxury buyers, select move-up buyers, 55 plus home shoppers, and very importantly, relocators that I'm going to talk about at length in just a few moments. But as we look at this, and we cut the data looking at Florida, we can see that all cash buyers range from 35% among some of the top markets in Jacksonville to over 41% in Miami. Now, where does this cash come from? We know that people can tap wealth in some instances. This doesn't apply to everyone, but there's a certain group that has long-term savings, that maybe has benefited from the generational transfer of wealth, that has money in the stock market, that has money tied into their home, and that home equity becomes an important factor as well. As you look across the country and you look at the average equity gain compared to last year, look at Florida, #1 in the nation. When we look at this, we know people that already own homes have been a beneficiary of this. They've seen their wealth go up, but this becomes particularly important and partly driven by the existence of those relocators, people moving from higher income areas to lower, higher income and higher cost areas to lower cost areas. So let's look at some of the migration data. And for those of you that are connected with me on LinkedIn, you've seen some of these stats already, but we're going to talk about them, especially related to Florida. So U-Haul, they release their data once a year at the beginning of the year. They showed that Florida was #2 for last year, just behind Texas. But if you look at a different data source, the census, they just came out with their data. And many of you will recognize this. This is showing you the markets that have the most domestic net migration, more people moving in than moving out, with a population of 1 million plus. I'm intentionally not showing you 2021 to 2022 just yet. This data is going to be through the middle of last year. So it's not a full year's look. It's kind of running middle of 21 to middle of 22. But as you look back in history and you think about Florida, you can see Tampa, Jacksonville within the top 5 going back to 2015. When you look at Orlando, #7 and 10, respectively, in 2015 and in 2016. Orlando, for the most recent data, pops up to #5. And now Jacksonville leads the nation, Tampa at #2. Now, this is based on percentage change in terms of domestic net migration. We took these same 3 markets and rearranged it by volume. We have Tampa coming in at #1. On average, 185 people move into Tampa per day, 162 in Orlando, 91 in Jacksonville. So we can look at these higher and these larger markets, but then we say, okay, well, what about areas that have a population from 500,000 to 1 million? Well, as we look at this, you see Florida represents 40% of the top 15. And as you look at these markets, West Coast, East Coast, Central Florida, really kind of spread across the overall state. Let's look at it a third way. Domestic net migration, regardless of population. We don't care if you're a large market, a medium-sized market, a small market. We just want to know, what's the growth rate? Well, 50% now of the top markets fall in Florida, more concentrated in the western part of the state. But again, you can see west, east, and central Florida. As we look at this, one thing that we wanted to do is say, okay, well, how has this changed? What does this look like, this migration cycle, meaning the past few years, compared to the last migration boom that we experienced? Well, if you go down to the bottom here, Cape Coral, Orlando, Palm Bay, Ocala, Tampa, Miami, these are markets that have seen actually more migration than what we're talking about. We've spent so much time talking about work from home and how that's really changing migration patterns. Well, during the last migration boom, these markets at the bottom have actually seen greater levels. Jacksonville, Lakeland, you can see Port St. Lucie. These are some of the markets where they have become more of the winners, more of the markets that have changed in response to how the economy has changed and where people change. So these are below, and they're at the highest level they've seen in terms of overall migration compared to what we've seen in the past. Now, this discussion and that data point is telling you more people moving in than moving out. But of course, there are people that are also moving out, just not to the same extent. And when we look at people that are moving out, we know part of that is a flight to affordability. Take Jacksonville, for example. When you look at where people are moving from Jacksonville to, 8 of the top 10 are within Florida. 5 of them feel very specifically people moving for more attainable reasons. Jacksonville has become expensive relative to Jacksonville. Well, where are they going to? They're trying to find somewhere else. They can still enjoy the lifestyle, the benefits of the state, but can get a little bit better of a price. Tampa, very similar story. Of the top 10 places where people are leaving Tampa to, 8 of them are still within the state. Makes sense to me. If you look at entry-level housing across the country, now Jacksonville among the top Florida markets is the highest for having the most projects under 300,000. But this has evolved very much. In 2019, 50% of all of the projects in Jacksonville were under 300,000. Today, it's 18%. Orlando, it was 42%. Now it's 3% of the market. So people are looking for affordability. And the problem is entry level is difficult to build. It's the most scarce, and it has the largest buyer pool. You have entry-level buyers, you have local buyers, you have lower income buyers, you have flippers, you have investors that are looking to secure these homes and turn them into a rental property. Now, as we look at this, and if you're in Florida, a lot of this data looks really good and really encouraging. And you know that I'm not always good news. Sometimes I also want to bring some words of caution. And what I would say is migration should not mean complacency about how you view the market. Migration does not guarantee success. Now, I want to show you this exercise that I went through, and I'm going to make it abundantly clear that I do not think this cycle is the same as last cycle. I will show you stats. Zonda has been very consistent in saying we don't think this is the same as last cycle, but I think there are lessons that we can learn from past cycles and how people viewed the market. So here are some articles. I'm going to show you some article clippings from the mid-2000s. This article is talking about at first Las Vegas. Roughly half of the buyers relocating to Las Vegas do so because the housing is still relatively affordable. Keep going down. In fact, it's no coincidence that markets with strong home price appreciation are also areas that have an influx of new residents, in most cases drawn by affordable housing. Notice they're talking about Riverside, San Bernardino, Sarasota. Think back to last cycle, and I'll show you a chart if you don't remember how those markets fared. Census findings are in keeping with the trend among home buyers and homeowners to move away from high-priced markets to more moderately priced ones. Notice Jacksonville, Phoenix, listed off here. For the 19th straight year, Nevada was the fastest growing state. Number 2, Arizona. 3, Idaho. 4, Florida. Much of the increase is due to migration from residents elsewhere. So we're looking at this, and as I went through the articles, they were basically saying everything is fine. These markets will never correct. These markets are just in full growth mode because relative affordability, high migration, and a strong labor market. As we look at how those markets evolved, again, we are not calling for a housing bust. I'm not saying this is a repeat of last cycle. I'm saying a market can move from a virtuous cycle to a vicious cycle if fundamentals get too out of line, if home prices get too out of line with what we're seeing with incomes, for example. But let me go back to my original point. Don't think this is the same as last cycle. I think this is worth understanding. I think this is worth keeping yourself in check around some of the enthusiasm. But also remember that this time around, we have constraints on home building. I know it was frustrating over the past few years, but we weren't able to really get over ahead of ourselves because of the lack of labor and materials and lots, et cetera. We know that work from home is something that has fundamentally changed, and there are some areas that have become just increasingly more desirable because of the ability to work from home and hybrid work. And remember too, consumers have 2% and 3% fixed rate mortgages, so different from last cycle. If you look at adjustable rate mortgages, these are not inherently bad, but what we saw is we got over 35% of the market during the mid-2000s was adjustable rate, and they do become a little bit risky when you have people stretching their incomes, when you don't have to verify your incomes, and when mortgage rates go up. As we track out how this has looked from 2009 to where we are today, we did see a little bit of a jump getting closer to 15% as interest rates rose, but still a very, very small share. It's even come down since then. Look at mortgage credit originations. This is showing you last cycle through 2006. And notice that it's really range bound. You can see that, you have some parts of the market under 620 credit score was about 15% of the market. You can see how this has evolved with where we are today. Again, really since 2009, we're talking about the largest share of people that are purchasing having a 760 plus credit score. So again, want to reiterate, don't think it's the same as last cycle, but also don't think migration is a guarantee for long-standing success. I think longer term, yes, medium term doesn't make these markets recession-proof if we do see a broader economic slowdown. Finally, before I pass it on to Kristine, I just want to share our forecast. We went through these a couple weeks ago and actually left them unchanged from our most recent update as well. Our base case right now is that we're expecting a 22% drop in overall housing starts. What we do is we try to keep ourselves in check. Are we being too positive? Or are we being too negative? Well, as we think through this, we do have a recession, economic recession baked into this. We assume it's mild and short. What if it isn't? What if affordability challenges don't get any better? What if financial markets tighten in response to SVB? Well, if you have a lot of these factors hit, our idea of down 22% may be more dramatically pulled back. But are we too negative? We talked about at the beginning of this presentation about how the housing market is showing a lot more signs of life than originally thought. We know housing leads the slowdown to the rest of the economy and rebounds faster than the rest of the economy. And I'm also talking as if a recession is guaranteed. It's not. Recession could be avoided, and if it is, our forecast is too negative. But as it stands right now, again, we expect about nationally down 22%. Now with that, I'd like to introduce Kristine Smale, Zonda's Senior Vice President of Advisory and Florida expert. Kristine leads many of our advisory studies across the Southeast, including built to rent, residential feasibility for land banking partners, and mixed use work. Besides being downright great at her job, Kristine is a self-starter who is led by her curiousness and desire to always improve. Kristine is constantly willing to go that extra mile, and the way she juggles her countless responsibilities at home and at work is truly inspiring. Kristine, I'll pass it to you.
Oh, thank you, Allie. I really appreciate that kind introduction, and I am excited to be here today to talk about Florida. So without further ado, let's get started. And I want to start, we'll go back one. Start with the labor market. Here, just a little bit of technical hiccups here. So I want to talk about the labor market in Florida. I know, Allie, you did not cover the overall economy aside from acknowledging that, yes, mortgage rates have gone down. But a reason the mortgage rates have gone up so much is because, and you've explained this very, very well over the years, is we've had very strong employment coupled with rising prices. And that strong employment is not any more evident than where it is in Florida. So the average unemployment rate across the entire country, 3.5%. The large metros in Florida are less than that. We have Orlando coming in at 2.6%, Miami, Tampa, 2.5%, Jacksonville, 2.4%. So leading the country, all less than 3% unemployment rate. Very, very strong economies in our major markets in Florida. When we look at what that employment is made up of, we have a very strong and different employment base than we did pre-pandemic. That work from home, the COVID-induced migration has really done a lot for our state and for the local economies. When we look at high income jobs relative to where we were pre-pandemic, we have Jacksonville, Tampa, Orlando, Miami, again, have recovered more high income jobs and have actually grown those high income employment sectors compared to where they were before the pandemic. Who has not heard of Wall Street South? West Palm Beach, the new moniker for Wall Street South. We've had a lot of high profile financial firms move there, and that growth is happening not only in Southeast Florida, it's happening in Tampa, it's happening in Orlando, and it's happening in Jacksonville. So a very different makeup with the employment base in Florida right now compared to where we were pre-pandemic. We know that across the housing market, as we shift over to what has happened in the last year, housing starts were down more than 20% year over year in 2022. But in Florida, it's been a little bit of a mixed bag. And I want to start with Central Florida first. We actually saw no change in the level of starts activity in the fourth quarter of 2022 compared to the prior year, relatively flat. However, it was a bit of a different story in Tampa, where we saw a 17% decline in housing starts as builders pulled back, specifically in the second half of last year due to that slowing consumer demand. But on the flip side, and this is why Florida is full of so many different unique markets, in Sarasota, in the Sarasota-Bradenton market, we actually saw a 10% increase in housing starts. And on an annual basis, that metro is just within 5 starts of the Tampa metro. We always hear of Tampa being a large housing market. Look at what is coming up right behind Sarasota, Bradenton area. And a huge part of this is the growth in Manatee County, particularly in North Manatee County. Manatee County offers great proximity for commuters who are working in the Tampa metro area or in Sarasota. It's kind of in between those two downtowns. And the other thing it has is a lot of land. So we did see an increase in housing starts in the Sarasota-Bradenton metro area. The next one I want to focus on is Jacksonville. Jacksonville saw a 13% decline in year-over-year housing starts last year compared to 2021. And then finally, we can look at South Florida, where we saw a 20% decline in housing starts. And I will caveat the South Florida aspect, and that is largely due to the availability of land. So some of this land availability, some of this in other markets, it was response to the slowdown in consumer demand, a little bit of both. So that's where we kind of started the year. And as Ali gave a great presentation about what is comprising the demand here in Florida, and due to all of that strong migration that she mentioned and detailed, we have seen home values in the large Florida metros increase across all different price tiers. So this is an exercise Ali has done before where we break up each major housing market into buckets, the bottom third, the middle third, and the top tier. Well, when we look at Miami, Jacksonville, Tampa, and Orlando, we see that bottom tier price appreciation more 14% or higher. It's 21% in Miami. The middle tier price appreciation, 9% year over year or higher. And same with the top tier, 8% year over year or higher. Now, a lot of that is due to that continued migration and the continued demand. Yes, somewhat relative affordability compared to other metro areas, but that story is changing. Ali showed you the home equity presentation, where we see people in Florida had the largest equity gain across the entire United States in the last year. So we can absolutely see that it's higher than any other area in the country. So not only did we have that high price appreciation continue year over year, we also had, of course, the increase in mortgage rates. They doubled over the last year, and this is an exercise that we do, and we wanted to really show you where Florida stacks up compared to other metros across the entire country. So we previously just illustrated how Florida, those major markets have had the strongest price appreciation, much stronger than the Austins, the San Franciscos, the Denvers, where we have seen even some price depreciation. But continued price appreciation in Florida, coupled with those doubling of mortgage rates, has led to a 64% change in that average monthly payment year over year in Miami. It was 60% increase in Jacksonville, 59% in Orlando, and in Tampa, 58%. Much, much higher than other areas around the country. If you look at Denver, for example, there was still a 45% increase, but a lot of that had to do with the increase in mortgage rates. In Florida, we've had double whammies. We've had the continued price appreciation, which can be somewhat of a double-edged sword, as well as the increase in mortgage rates. And we well know that when your mortgage rates go up, your purchasing power declines. When you used to be able to buy, say, a $500,000 home in Orlando at a 3% mortgage rate, and you want to keep that monthly payment around $3,000, that you used to be able to purchase that. Fast forward to today, where we have a continued price appreciation in Orlando coupled with the increase in mortgage rates, you're looking at a very different price point that you can afford, just about $350,000. And if you remember from Ali's slide about the share of new home projects under $300,000, Orlando has less than 5%. So your choices are very, very different today compared to where they were before the pandemic if you're looking for housing in Florida. The resale market also remains muted. And this is somewhat of an opportunity for the new home market. We know that existing sales in many of the Florida metros are down year over year, and they are down compared to 2019 levels. 2019 presents a great base case scenario. If we look at Orlando, for example, down 25% from 2019 levels, and down more than nearly 20% from last year. So continued muted activity in the resale market across Florida. And that's compared to some other areas in the country, particularly in Texas, where you have seen an increase from 2019 levels. Here in Florida, resale activity remains very muted in those large markets. And a big part of that, yes, it is due to those rising mortgage rates, but look at where we are on an inventory level. So that is the big piece here. And I always, when I give presentations or I speak with clients, I always want to say, roll back, you have to put things in perspective. So yes, on a year over year basis, we're down significantly. We're down from 2019 in these major markets. But look at where our listing count is compared to 2019 in some of our major Florida markets. We are down anywhere from 35 to 50%. There is just less inventory out there. Again, presenting an opportunity for those new home builders. Switching over to the new home supply. So we know that there is an opportunity, but we also know that we had a slowdown in the housing market the second half of 2022. Florida was not immune to it, although I will say it occurred a little bit later in the year compared to other areas of the country. The good thing is we have seen some of the quick move-in inventory, the QMIs, which is essentially a home that can be moved into within 90 days. We have seen that roll over a little bit. It certainly peaked at the end of 2022. It has come down, and we are continuing to closely monitor it. But again, this situation really varies across the entire state, and it varies by market. Jacksonville, for example, and I just want to highlight where we are in Jacksonville compared to where we were in 2019 in terms of the QMI inventory levels. So back in 2019, we had 188 QMIs available. Last year, we had 207, so that was still a little bit higher than 2019 levels. This year, we actually have a pretty significant increase. But one thing that we're able to do at Zonda, and one of my favorite things to do, is we're able to kind of map where these QMIs are. And when we look at a heat map of where this quick move-in inventory is in Jacksonville, it is certainly in the more affordable submarkets. And that, as we well know, is the buyer group that's been hurt the most by the rising mortgage rates, the first-time home buyers. So that is where we're seeing a bit of that buildup in QMI inventory in Jacksonville, and we'll continue to work through it. Lower mortgage rates should help, as well as builder incentives. It's a different story in Orlando, though. In Orlando, our QMI level is actually 15% lower than where we were in 2019. So there's still very limited new home supply in Orlando, particularly something that can be moved into within the next 90 days. In Tampa, we're relatively flat, but in Sarasota, we're up 32% compared to 2019. However, you have to put this all in perspective. Remember, Sarasota was one of those markets that had a 10% year-over-year increase in housing starts, and that's because of the availability of land and some of the shifts in development activity throughout the Tampa-Sarasota region. So we do have a significant increase in QMI inventory in Sarasota. A lot of that is, again, kind of in the entry-level side price points and in the entry-level submarkets. So we're going to continue to monitor it. Another thing that we want to monitor, and if we look at Miami, Miami is the supply-constrained destination of the entire country, because new quick move-in inventory in Miami is down 45% compared to where we were in 2019. It is so hard to find a house in Miami, and that's why you'll constantly see headlines of Miami is leading the country in terms of home price appreciation. There's really nothing available. Another thing we want to look at, and here I am going again ahead of myself with the slides, is the units under construction by metro area. We look at where we are today, fourth quarter 2022, our most recent data available. We're scrubbing our Q1 data, and we can't wait to soon. And then we're looking at the number of units under construction in the fourth quarter 2022 compared to the fourth quarter of 2019. So, for example, Jacksonville, we have seen an increase, more than 100% increase in units under construction in Jacksonville compared to 2019. Well, that is due to a variety of factors. Number one, we know that the Jacksonville market has grown immensely. It's number one for U.S. migration. So builders are trying to keep up to build the homes. The question is, are the homes being built in the right location? St. Johns County is a very, very popular county in Jacksonville. It's actually the best school district in the entire state, but land is very scarce in St. Johns County. So we do have some markets that are absolutely growing. That's why you see the units under construction significantly higher. And then the other part of that equation is the backlog and the longer cycle times. We know that 97% of builders reported longer cycle times, and that was due to all the material and supply shortages. Even Miami, which has very, very little inventory compared to the demand that's occurring there, we're tracking 20% more homes under construction compared to pre-pandemic. And a lot of that answer in Miami directly is related to that cycle time. So we're watching this. But we are seeing that QMI inventory roll over, and we know anecdotally, according to a lot of the builders that we have spoken to in Florida, that about 60% of all homes under construction are already contracted with buyers. So moving on to the lot supply situation in Florida, in these major markets. Well, as Allie's presented before, and this is her brainchild, the New Home Lot Supply Index, it's essentially an index of the VDL supply across the entire country, a VDL being a vacant developed lot, a lot that you can easily build a home on. Well, it turned the corner in the third quarter of 2022 after record low lot supply. A lot of that was due to the slowdown in housing starts. We didn't necessarily see, we knew developments were underway, but we also saw housing starts slow down in the second half of 2022. So that's why you did see that lot supply come up. Well, what we look like in Florida in our major metros is we are still very constrained compared to 2019 levels. In Orlando, so for perspective, we consider a balanced lot supply, balanced VDL supply between 24 and 30 months. In Orlando, currently, we are just over 1 year of lot supply. That's all we have. Tampa, just a little over a year at 14.7 months of lot supply. Jacksonville, we have less than a year of VDL supply. And Miami, the most constrained, 7.2 months of VDL supply. It was tight, yes, back in 2019, all of these metro areas were still well below that 24 months of lot supply, but right now they're even more constrained. But the good news is they have turned around from the absolute bottom, and we are starting to see a little bit more availability, but in no means are we seeing any kind of oversupply situation. So we talk about the larger markets in Florida, and we just went through Jacksonville, Tampa, Miami, Orlando, bigger markets in Florida. But as Allie showed you with her migration data, there are a lot of other markets in Florida with a lot happening. And I think just the amount of driving I've been doing throughout the state over the last 3 weeks, they are all performing very, very well. So I wanted to highlight a few of them for you. So these are the other small markets in Florida that you can absolutely not ignore. And there's a lot of activity going on. So we have the Panhandle with Pensacola and Panama City. We have Tallahassee, the state capital. We have Ocala, which is north of Tampa and Orlando. Lakeland, which has seen very strong growth, and that's between Orlando and Tampa. Palm Bay, which is on the east coast of Florida, and that's essentially known as the Space Coast area. Port St. Lucie, continuing on the east coast of Florida, which is just north of Southeast Florida, its own strong housing market in its own. And then as we go around the state, we have Southwest Florida, Naples, Fort Myers, Cape Coral, Punta Gorda, which is between Fort Myers and then Sarasota, all the way up to Tampa again. So these are some of the smaller markets that we wanted to compile the data on and really look a little bit further as to what's happening. So as you recall, the national unemployment rate, 3.5%. We had our large Florida metros, Jacksonville, Tampa, Orlando, Miami, all less than 3%. Well, here, these smaller markets, some of them are performing even better with the unemployment rate. Look at Panama City. Panama City's unemployment rate is less than 2%. Pensacola is 2.3%. Tallahassee, Palm Bay, pretty equal to Jacksonville, 2.4%. So very, very strong economies, and even these smaller Florida markets. We have seen the gains in high income job growth here as well. All of the smaller markets that I've mentioned in Florida have recovered more than 100% of their high income jobs that were lost pre-pandemic. All of these smaller economies are stronger as well. And why is that? Again, it's that work from home that's really helping boost up these economies. And it's also a lot of ancillary employment related to all the migration we've had. We know Florida is a destination for retirees, but it's also been a destination for people who have the flexibility to work from home and are coming with high incomes. And so therefore, we're seeing more demand for financial and professional business services. So high income job growth is strong in these markets as well. And we'll go back again. We're having just some issues with controlling the screen. I'm sorry about that. I clicked ahead another slide. But with these smaller markets, we're certainly not immune to the payment shocks as well. So we went through the home price appreciation that occurred just year over year and the monthly payment changes that occurred year over year in those larger markets. But think back to the beginning of the presentation when Allie showed you that the current monthly payment across the United States is up 82% compared to where it was pre-pandemic. Well, what does that look like for some of these smaller Florida markets? We have Ocala, again, that's between just north of Tampa and Orlando, where back in February of 2019, your average monthly mortgage payment was $640. Today, it's more than double that, 110% increase. If we look at Naples, Naples has never necessarily been affordable. I mean, back in 2019, your average monthly payment was just over $1,400. Today, it's nearly $3,000, 106% increase not year over year, 106% increase since the pandemic. So all of these smaller markets that people have moved to for relative affordability have had extreme payment shocks as well. And they are continuing to appreciate. Again, if we divide these smaller markets into buckets, the bottom tier, the middle tier, and the top tier, and look at price appreciation compared to the national average. So the national average bottom tier price bracket has appreciated 11% over the last year. Every single one of these small Florida markets has appreciated more than that. Some nearly double. Again, Ocala at the top of that list for the bottom tier price appreciation. Cape Coral, Fort Myers coming in right behind that with a 20% year over year price appreciation in that bottom tier. Let's focus on luxury across the board. The United States luxury homes appreciated about 4% year over year. So look at Naples. The luxury home bracket in Naples, the top third, had a 15% year over year price appreciation. So that is one question we're always asked. And as Allie also mentioned, one reason people are staying on the sidelines is they're waiting for some of these prices to drop. We are absolutely not seeing it in Florida. We're not seeing it in the larger markets, and we're not seeing it in the smaller markets either, just in terms of home price appreciation. The sales rate. So sales rate, as Allie said, it's basically measuring the volume of sales transaction activity per month, per product line for what is available to sell. So nationally, our average sales rate today is about 2.3 homes per month. If we compare that to where we were back in 2019 at the same month, back in 2019, we were just under 2 sales per month. So we're performing better today on a national level than we were in 2019. But look at these small Florida markets. They are performing better than the national average today, and certainly better than where they were in 2019, every single one of them. Again, I want to point out Ocala to you. Back in 2019, Ocala had a slower sales rate than the national average. Today, it is significantly higher. Same story with Punta Gorda and Palm Bay. They used to be slower markets, but now they are exceeding the national average and then some in terms of their sales activity. So these smaller markets throughout Florida have certainly changed. Another interesting view is looking at the existing home sales that have occurred, the change that has occurred year over year, and then compared to 2019. And this is where you can also really see some of the shifts in growth happening. So year over year sales in Punta Gorda, for example, are down about 3% year over year. But compared to where they were in 2019, they are up 40% compared to 2019 levels. So lots more transaction activity. Naples, same thing at the other end of the chart. Year over year, yes, sales in Naples are down about 25%. These are resales. Resales down about 25% year over year. But look back, Compare that to where we were in 2019. We're up 30% year over year. And now the next chart is really fascinating when we compare these data sets together. So if we look at the active listing counts, remember Punta Gorda and Naples, stronger sales activity today compared to 2019. Yet in 2019, our active listing count, the amount of supply that's available, is significantly below. More than 40% of resale supply drop in Punta Gorda compared to 2019 levels. So we have 40% less supply on the resale side. Yet again, we're seeing that increase in activity, that nearly 40% increase in activity in Punta Gorda. Same thing with Naples. We have 60% fewer listings than we did in 2019. But as you recall from that previous chart, we're seeing increased activity from 2019. So the homes that are available on the market in these areas are selling really, really quick. And the resale supply is certainly not keeping up. So what does that do? It presents an opportunity for the new home market. If we look at the QMI data and we look at the year over year change, I think this is another data point that really shows you how these small markets have changed over the last few years. So year over year changes in spec inventory, yes, those percentages are quite alarming. I mean, you know, in Sarasota, you have more than 1,000% year over year change, but that's if you look at the amount of supply we had last year in Sarasota for QMIs, it was virtually nothing, 29 homes across that entire metro area. So it's been a significant change. We're seeing increases and decreases across the board. If we do take a step back and compare that to 2019 levels, it varies, absolutely. We do see more inventory today in Sarasota compared to what we had in 2019. But also remember how we talked about how the growth patterns have changed in the Sarasota metro area. And we just have more communities in North Manatee County compared to where we did pre-pandemic. That's where a lot of the growth is happening. So I just want to emphasize, you can look at some of these statistics, but it's always good to understand the underlying factors in the market that's really fueling some of these changes. It's the same story if we look at units under construction by metro area. So yes, we have more homes under construction in all of these smaller markets. Again, part of that is due to the construction cycle times, but a part of that is also due to these markets have changed. There's more demand. For example, Punta Gorda, we have 87% more homes under construction in Punta Gorda than we did previously, before the pandemic. But if you've heard me speak before, I always say peel back the onions, figure out why that is happening. Well, in Punta Gorda, we've seen a huge increase in the active amount of new home communities. Back in 2018, we had about 20 actively selling new home communities. Well, we've more than doubled that in the last 4 years. So the market and the landscape in Punta Gorda are completely different. So that's why I always want to look behind the data. Now, what's coming down the pipeline in these markets? What about lot supply? Well, lot supply absolutely remains tight compared to 2019 levels. I do see Punta Gorda here has that 64.7 current VDL months of supply. And a big part of that is because Punta Gorda they have a lot of scattered lots, and scattered lots, that's a huge history, the history of Florida development and investor activity back in the 50s and 60s. But Punta Gorda is a market, lots of scattered lots. Some of them have utilities, some don't. They do show up in our lot supply, which skews that number a little bit. We also have some scattered lot activity in Ocala and Port St. Lucie. But again, remember, balanced lot supply is 24 to 30 months. Even with some of those scattered lots, those markets are still within equilibrium for lot supply. Naples, remember that shortage of resale inventory. Well, there's a shortage of new home in Naples too, just 8.6 months of lot supply. So the smaller markets in Florida absolutely cannot be ignored. You'll see the headlines, you'll see all of the big data figure numbers for the top 4 markets that I went through in the beginning, but it's always important to look at those smaller markets and where the opportunities are. So I'll wrap it up with an outlook for Florida. And I would be remiss if I did not mention the growing presence of build for rent communities. As Allie mentioned, a lot of my work is in the BTR space, and we're seeing a lot of activity. We are a little slow to enter the race behind Phoenix, but the developers are coming, the communities are popping up. And I will just say, there are some certain submarkets in Florida that may be at risk of a potential oversupply of BTR development. You have one successful community while 5 other developers are chasing that same success. So when we do our studies, it's really important to look at the supply situation, which is why we're really excited to have our rental report coming out later this summer. I would also be remiss if I did not mention investor activity in Florida. So across the entire country, according to Redfin, investors purchase nearly 18% of all homes. Well, in every single large metro in Florida, there was an equal or higher amount of investor purchases. In Miami, nearly 30 or more than 30% of all home purchases in Miami were to investors in the fourth quarter of 2022. That's all come down from previous highs, but Miami led the way across the entire country for investor purchases. So they're seeing this price appreciation that I just illustrated to you. And they also factor into that BTR supply that we always want to educate our clients about, because not only do you have your competitive BTR communities, but you also have your shadow rental market inventory as well. So that's something we're really paying attention to and tracking. But as Allie mentioned, things in Florida have gone very, very well, particularly in the fourth quarter of 2023 as the market has rebounded somewhat. I was with a couple builders earlier this week, and they said their first quarter of 2023 was better than last year. And we can see that come up in our survey responses. When we ask our National Builder Survey, how was your March performance versus your expectations? Well, nationally, we had 57% say that it was on track. 19% said their performance was slower. Well, in Florida, we had 81% say things were on track and 6% reported slower activity. So better than the national average. Same with prices. Nationally, we saw 34% of builders increase prices in March. In Florida, that was 43%. So some more pricing power remains in Florida as builders have found the bottom and they've worked to, they're working to see kind of how far they can push it again. Some markets that we do want to watch. So we went through all of these smaller markets and I kind of showed you some of the strong data points that are popping up. Well, which markets, in my opinion, really have some additional runway? So this is where I think I'll probably be spending a lot of my time over the next year or two, looking at new developments. So I think I'll be going to Port St. Lucie quite a bit. There's a lot in the pipeline there, a lot of activity. You have people who are moving out of Miami, out of Boca, out of Palm Beach. They're moving to Port St. Lucie for a little better affordability and a little quieter pace of life. I think I will be going to Punta Gorda a lot. Lots of activity going on in Punta Gorda. You saw that high income job growth, highest across all Florida metros. We also have one other important part of the equation in Punta Gorda, and that is land. And finally, I think I will be probably headed up to the Panhandle quite a bit. The Panhandle offers a great option for people who don't want necessarily all the hot weather in Florida, but still a good quality of life and the tax benefits in Florida. So I know we're coming up on the top of the hour. To summarize everything Allie and I presented today, our outlook for Florida is that migration will continue, but we can't count on migration forever. It's going to slow down, and it is largely dependent on what's happening in the feeder markets, what's happening in the overall economy, and consumer confidence. Affordability is a big issue in Florida. Thankfully, we just had an important piece of legislation passed called the Live Local Act, where we had major legislation. It's really going to address affordable housing. Insurance is going to be an issue. I was there for Hurricane Ian. I've had my home insurance costs go up, and that's really going to continue to affect affordability here. The growing pains with all this migration are certainly underway. So we're starting to see that migration from those larger metros to those smaller metros. So look to those smaller metros for continued opportunity. And supply continues to be limited, supporting our prices here in Florida. And with that, Allie and I would really like to thank you for your attention today. We are right on the hour. And please, we're going to post this recording to our blog within 24 hours. If you have any questions, feel free to reach out to us. I know we ran out of time today, but we're happy to speak with you individually, and scan this QR code to subscribe to our upcoming webinars. With that, thank you.